Okay, so I'll go through the slides. I'll actually get my WhatsApp over here just in case. Sorry, 2 seconds. Just I don't like when someone's trying to get into the call and we're half an hour through it. WhatsApp web. Right, okay. So are you ready to get started then? Yeah? Just have notebooks and a pen?
Yes.
Nice. Cool. Okay. So the structure of these 4 weeks is week one, which is the call we're doing right now. It's going to be price, action, and strategy. So it's going to be an introduction call. I'm going to basically show you briefly how I view price action, give you some tasks at the end of it so you can practice it yourself throughout the week. And then week two is going to be confluence. So that's where I'm going to bring in other concepts that you can combine for a list of confirmations, just to basically help you guys get higher quality entries and understand more clearly where to get into the market and where to get out of the market. Because I feel like that's what a lot of people struggle with. And once you have that concrete, then you can focus on getting more consistency and making your losses smaller and your wins bigger. And then week three, we're going to go through trading psychology and risk management. This is personally my favourite one, week three. I really like it because I feel like the students always get a lot of self-awareness and it's kind of a breakthrough. And then week four is putting it all together and that'll be a Q&A as well. So for week four, I'm going to ask you guys to make sure that you have all the tasks completed from the previous 3 weeks and then come to the week four call with 3 questions each. And then I'm going to go through all your questions and basically it's just to wrap up what we've went through in the course content. So today we're going to go over how to read price action, market structure, expectational order flow, supply and demand, which is the base of the strategy, and order blocks, which is also part of the strategy. And then we'll go for the big one tasks. Also, if anyone's struggling with my accent and needs me to speak slower, just tell me. Kristen, I'm sure you don't have a problem. A lot of people think I sound Scottish. They think we're very similar. Yeah, if anyone can't understand me, just tell me to slow down. So, yeah, you have your notebooks, you have your pens. There was a study done that shows that we only retain 5% of the information that we hear or we learn if we don't take notes. So try to scribble down some notes. It'll help this go into your long-term memory better. But you'll get the tasks and the slides afterwards anyway. So we'll start with the basics. So what is price action? It's what we use to read the market and it's what we use to make our decisions, right? We have the data user. I feel like there's no one that's new here, like really new to trading. I feel like you all have some sort of trading experience. So you understand what price action is. So basically everything on this chart is price action. When you open up TradingView, when you open up your chart on MetaTrader 4, it's all price action, every single piece of it. And there is only really 3 ways that the market can move. So before we want to apply our strategy to the charts, the first thing we want to do is figure out what direction the market's actually going in. Like we want to be on the right side of the directional bias of the market. There only is 3 ways the market can move. Oh, yes. So the first is up. Sorry, I got trigger happy there. So the first is upwards, and this is whenever price is uptrending, and it looks like this. It just simply means price is making a series of higher highs and higher lows. You can see the highs are breaking and the lows aren't breaking, so that's when price is uptrending. There's a bullish bias, meaning there's more buyers in the market than there is sellers. And then the second way is downward. So when the market is downtrending and it looks like this. So a series of lower lows and lower highs. You know, the highs are holding, the price isn't breaking through these highs, but it's breaking through the lows. So that means there's more selling pressure than there is buying pressure, and therefore price is downtrending. And then the third way is sideways, and this is when price is ranging. So what we see when you look at price action when you step back is it only ever moves in one of these 3 ways. And you'll often see it go from a downtrend to a range to an uptrend, or likewise an uptrend to a range to a downtrend. So you find this like kind of accumulation before there's a switch in trend.